what does a good investment property look like?
The fundamentals of property investment haven't changed. From an investor point of view, they should always be looking at a long term. And one property cycle, and the barbecue is around 10 years or so. With property investors, they should be thinking about what does the property cycle look like in 10 years. And then from that sort of decision, we can look at great assets in good locations that are going to perform well. And they're indicators that this property is a good purchase for us.
Welcome to a Property Investor Series. Today, our esteemed guest is Sohrab Anwari, Director of Cartesian Property. Sohrab, great to have you here. It's always good to have a chat with you too. You've been known for your research methodology. So tell us more about how the property market has evolved in the last few years and how people are investing in this property market.
Yeah, thank you, Asim. It's always great to sort of have a conversation with you. I suppose the way that the property market has evolved is technology. We've got access to amazing technology that gives us insight into suburb profiling, past performance. That's a great indicator into what's going to happen in that area. But that being said, the fundamentals of property investment haven't changed. It's about buying a good asset in the right location. And then there's other variables that we apply to that determine whether you're buying a good asset or not.
Yeah. Well, look, that's the question in everyone's mind. What is a solid investment property, especially if it can triple in overnight? That's what we think when we're buying it. But, from your point of view, what does a good investment property look like?
Yeah, fantastic. I suppose that initially it needs to come from the client themselves and their mindset. If they're in that position that they got the property's going to double in value in a short time, then they're probably more so a property speculator. But from an investor point of view, they should always be looking at a long term. And one property cycle, we're arguably around the barbecue is around 10 years or so. So if we're working with property investors, they should be thinking about what does the property cycle look like in 10 years. And then from that sort of decision, we can look at great assets in good locations that are going to perform well. And they're indicators that this property is a good purchase for us, a good purchase product.
Yeah, look, and when you see those property being bought, I think we clients more focused at the time of the buying. Okay, we're going to get this property, where the location, what type of property it is. But one of the questions get unanswered, which I know you guys covered a fair bit. What's going to happen once you buy the property? How's the rental market going to perform? Whether it be positively cash flow or negative cash flow? And how do you tackle some of these questions?
Yeah, absolutely. I think when it comes to property investment, you don't want anything left to chance. So we try to answer as many questions as possible for the buyer. And one of the biggest questions is, well, if I buy this particular property, what's it going to rent for? Now, in certain circumstances, those properties need to be built. But on every property we do, we get a current market rental appraisal from a local property manager or an expert that understands that area. Now, based on current market conditions, we can then apply deposit amount, we can apply capital growth in that suburb, and we can apply those factors on a 10-year chart, and we can determine how that property is going to perform.
Yeah, going through the charts and the numbers is important. And as mortgage broker, we always say to clients, make sure you know what your budget is, what your end goal is, short term and long term, and then get into the property market. And speak to you guys as one of the experts in the market. And what are you seeing? There's a lot of talk about interest rates going down. How are you seeing the market performing in that decreasing interest rate market? Has it changed, or is it still flat as it was? Or what are some of the changes?
Well, I think the key thing with interest rates going down is an increase in buyer confidence. The savvy buyers are getting in early, noting the fact that it's widely accepted that interest rates are on the downward trajectory even further than where we are at the moment. So when you get more buyers in the market, and it's a very simple sort of demand and supply equation, where you get more demand in a low supply situation, prices tend to go up. So the savvy buyers are getting in early, and we've seen an increase in inquiry over the last sort of few months with those interest rate cuts.
And where are a lot of people buying nowadays? That's the $1 million question everyone is asking.
Yeah, absolutely. So property investors follow the property clock. And the whole key thing is to buy, you make your money when you buy. So you're trying to buy at an advantageous time where the property market is at its lowest. We've had a lot of success with clients purchasing in Perth, in Western Australia, as well as in Brisbane, particularly with the Olympics coming up, the lead up to the Olympics, the infrastructure planning towards that, and also 10 years post-Olympic is producing some really good results. But also, I think Melbourne at the moment presents great opportunities to be buying an asset that is undervalued. Given the population increase and the density of where we are, I think it resides really well for a long-term investor.
And that's a really good point. Being in Melbourne, we want to know what Melbourne is doing. Is there a client story you want to share, which where the asset has really performed well and they were able to see some good capital growth?
Yeah, absolutely. There's two stories I'd like to share actually with you. Great question. So, story number one is a client of ours who are quite young professionals were introduced to us by their mortgage broker. We interviewed the client to get an understanding of what their drivers were. They're an owner-occupier and they reside in an infill suburb north of Melbourne. So the key thing for them was to buy an asset that's going to perform well long term. Even though they're in their early 30s, they were thinking about retirement, noting the fact that their super balance is not going to fund their retirement planning. They were fortunate enough to have parents that had multiple properties and advise them to get into the market as soon as possible. So key things for these particular clients were not necessarily about buying in an outfield or a greenfield site, but buying something close in a city that is close to transport nodes, close to green spaces, close to amenity, close to hospitals. And these are the sort of drivers that we know are going to lead to strong returns in terms of capital growth. So we're able to assist that client into buying a property there. The biggest concern of the client was, is this builder going to be able to be around to deliver this particular asset? To de-risk that situation, what we did was the client put up 10% deposit, held in trust. The builder goes and builds the asset and they settle on it at the end. There's some amazing concessions to go through, particularly in Victoria at the moment, with building brand new, with stamp duty waivers and whatnot. And that makes a massive difference in terms of holding position in cash flow for clients rather than buying a fixed asset.
That's a good point. You go through the needs, what they're after, and then finding the right asset for them. And what is the role of a mortgage broker in your process, and what sort of things you've seen, and how key a mortgage broker's role is as per your observations?
Yeah, absolutely. I think the conversation of property investment generally starts with the mortgage broker, and the mortgage broker having a conversation with their client, understanding where their goals are, understanding where they are, and planting the seed and giving them an idea that where you are in the market, what are your goals, where do you want to be, did you know your property's worth X, did you know you have amazing equity, did you know you can utilize that to buy an investment property? And you'll find, I think mortgage brokers tend to find when they have these conversations that their clients are also thinking about the same things. They just don't know how to do it. So as long as the broker is having that initial conversation, then we can refer that out to other businesses like ours. They choose property, they can get independent advice from their accountant, and they build a team of experts around them. And I think that's what's critical here, is that the client has a team of experts like a broker, an accountant, and property advisor that can guide them, and they're getting independent advice that is helping him buy property.
Yeah, well, look, a lot to unpack here and a lot to take in. Look, thank you for coming in, Sohrab. It was a pleasure having you.
Thank you, Hussein.
Thank you.